The Polestar was created to provide performance electric vehicles with Swedish design. A racing skunkworks for Volvo, Polestar is now an electric spin-off and collaboration with their Chinese owners. The cars will be sold worldwide using first-hand technology as a template that can be integrated into all sorts of vehicles. Recently, Polestar's latest electric car raised $890 million in a new public offering. Want to know more about it? Luckily for you, Fortune Fastlaner, we have prepared everything you need to know about the electric vehicle manufacturer Polestar after it went public via SPAC Merger. Remember that while the first step is completing any of these amazing courses, the second and possibly more important step is taking action, even if it's imperfect action. The Volvo Spinoff EV brand announced plans in September 2021 to go public. To do so, they partnered with an SPAC deal that would allow the private company to deal with both aspects of the operation by merging themselves into a publicly traded company. Just so you know, SPAC deals are emerging as a more effective way for startups to go public. The benefits of this method include increased product development and production efficiency, as well as attracting traditional investors. In comparison to other startups who use SPACs, Polestar has the advantage of being backed by an established company, Nissan. Now, let's go to the recent announcement. Polestar had their stock debut as PSNY on Friday, making it the latest electric vehicle maker to go public via a merger with a special purpose acquisition company. This joins other EV companies such as Tesla and Rivian to broaden their reach in the automotive market. The company will use the new funding for its 3-year plan to design and produce new vehicles. Thomas Ingenlath, CEO of the company, said that it will also eventually become profitable. On June 28th, Polestar will ring the opening bell at Nasdaq to celebrate its debut as a publicly traded company. Now, Polestar stocks began trading on the Nasdaq exchange one day after it completed its merger with Gores. On Wednesday, they ended the day at $13 and up 15.8% from the SPAC's final closing price on Thursday. Polestar plans to use the nearly $850 million they gained from the deal to support their 3-year plan, which includes producing new vehicles and turning a profit in the future. Thomas Ingenlath, Chief Executive Officer and member of Polestar's Board of Management, says that when it goes public in 2020, it will be a huge success. With their new range of SUVs coming out, the company needs cash to grow, and they see going public as one way to do that. By 2025, Polestar aims to sell 290,000 cars per year, 10 times more than it did in 2021. It also wants to establish a new chapter for itself, which will be summarized by the word growth. In order to achieve these goals, Polestar will use the funds and platform of an IPO on the Hong Kong Stock Exchange. Though Polestar already has a successful business model and brand recognition, this funding will help them accelerate their plans and environmental leadership. Lath told our source in a recent interview that they can go public as an operating and successful business. Not to raise capital to build a business, but because the next 3 years will be super fast growth. The company is geared up for that with their product portfolio. Few SPAC investors have seen any price performance improvement if they invested in electric vehicle startups. There are a few exceptions. Lucid, Fisker, and Nikola are the only examples that have shown post-merger highs above their original IPO launch levels. Rivian is the exception, with employees that have seen a decline of 84% of their shares since going public through traditional markets. 10 mergers of SPACs with electric car companies haven't been successful according to investors. The two relatively more successful cases were Lucid Group, Fisker, and Nikola, which are trading just over 67%, 69%, and 92% below their post-merger high respectively. One truck maker, Rivian, shares have also struggled, and they are down 84% from its post-IPO high. A SPAC is a less complicated way for companies to go public. These disclosure requirements are simpler than those in an IPO and furnish the investor with projections that can justify their valuation. However, there are risks involved with these forecasts not coming true. Volvo, one of the largest automakers in the world, is working with Polestar to release another groundbreaking electric vehicle in 2020. The new advantages that Polestar has over competitors are already being shown through higher than expected sales of electric vehicles around the globe. And they have their operation up and running in China, as well as an assembly line set to start production this year. Performance cars from Sweden will now be listed in the US with the ability to access manufacturing expertise. This marks a milestone for these brands, which are only 2 years old. They were established by combining startup agility and access to manufacturing capacity from its two largest shareholders, Volvo Cars and Geely. Volvo Cars and Geely have achieved their goal of the Polestar surpassing startup status. The company is still new, but continues to grow since it was first founded in 2017. There are many advantages to a car company, Volvo Cars creating an electric vehicle brand of its own. One advantage is that they already have more than 55,000 vehicles, mainly electric sedans, on the road all over the world. Polestar will launch 3 new models by 2024. The Polestar 3, a mid-size SUV, will be available in 2023 and will be built at Volvo's South Carolina factory. The Polestar 4, a coupe-like crossover SUV, will also be unveiled in 2023 and will also be built at Volvo's South Carolina factory. The Polestar 5, an 884-horsepower 4-door fastback based on 2020's Polestar Precept concept vehicle and is set for release in 2024. All Polestar vehicles are electric and they are all available in the US, Europe, and China. All cars will be built in these 3 regions. By 2025, it is estimated that there will be 290,000 new cars produced by Polestar. The Polestar company may need to raise more cash by 2025 in order to become profitable. The company will likely issue bonds instead of issuing stock, which is the current plan at the moment. So far, their plan is on track, as per Ingenlath. The company has received 32,000 orders for the Polestar 2 in the first months of the year, and that order came from 25 different countries. The company also got a deal with Hertz to make 65,000 EVs over 5 years, primarily to offer consumers an opportunity to try it out. But its goal is not actually profit. However, Polestar may be ahead of its competition. Often, new car companies like Ford have folded after a single year. Volvo Cars still controls a significant stake in the company, and Polestar is already on the road in China, Europe, and the United States. Polestar is planning to reach the milestone of 30 countries by the end of next year, but Ingenlath expects that it will happen sooner than planned. Polestar electric cars are just like Porsches. They use performance EV technology and aim to support a 10-fold increase in sales, as opposed to the growth rate of about 1/5 now. The name Polestar is recycled from Volvo's in-house tuner company that used it until being sold to the Polestar company in 2017. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!